What if the biggest risk is not doing nothing, but following advice that was never built for people like you? Because let's be honest, most Bitcoin talk is for speculators or people that are still in their 20s, not for successful individuals managing real wealth, not for founders sitting on multi-million reserves wondering what to do next. This is not about hype. It is about building your Bitcoin reserve like the ultra wealthy, quietly, securely, and with intention. The question we're answering today is, how much Bitcoin should you hold? And we will discuss allocation strategies for high net worth individuals, but also for a company. So if you are running a company, how can you build up a strategic Bitcoin reserve to benefit from this new trend? Bitcoin is not longer a bet. Today, it's been quietly adopted as a reserve strategy. Not a gamble, but to diversify against systemic risk and long-term inflation. At Strategy 7, we have seen many entrepreneurs, private investors, and family offices structuring their allocations with the same care they give to real estate or equity holdings, and here is how they do it. So let's have a look at one of our Bitcoin allocation strategies. First of all, we need to build a framework. So how does the framework look like? First of all, we need a strategic position. We need to incorporate Bitcoin as part of a broader alternative investment approach with wealth management. This investment strategy works best for forward-thinking clients with liquidity and a long time horizon. A Bitcoin strategy can help to diversify even more. And also in digital assets, you can diversify. We have a Bitcoin reserve, but you could also have a strategic blockchain reserve, like the US government is establishing the Bitcoin reserve, and then they also have their blockchain reserve or the other digital assets. As part of this strategy, it's also very important to have institutional grade custody. This can mean that you have a custodian or multiple custodians that will hold your assets, but this can also mean, like in family offices, we advise that they have multiple devices to sign transactions, or they have something like a Shamir backup where you can split up the seats and give it to multiple persons, and you need a certain number of keys to actually be able to transfer and access the wallet. For most of the countries, it's also very important to consider the tax management. Also, estate planning integration is important. We also need to talk about how you want to acquire it. When is the best time to buy? When is the best time to sell? So you could dollar cost average, or if you're liquid, you could just put a certain amount, and you can also mix these two approaches. Most people hear Bitcoin and immediately think risk. But the risk is not about price swings. It's about probabilities. When you actually study Bitcoin's risk-return profile, you see why it's now considered the most asymmetric asset of our time. Used properly, it offers exposure like venture capital with global liquidity. So let's have a look at Bitcoin's risk and return profile in more detail. What about the volatility? Yes, we have still a 4 times higher volatility than you would have with the S&P 500. Also, you could say that cash flow is a disadvantage because you don't have your dividends. Now we have new ETFs approved, Ethereum ETFs, Solana ETFs that will have staking, and this is basically replacing your dividends. You also get monthly income because of your staking reward. We still have a potential 1,000% return in a bull market. Maybe not in one bull market, but there's a lot of numbers out there that Bitcoin can go at least to $1 million in 2030. And this is not that far away. And it is a non-correlated alternative asset that is finding really big adoption now. Adoption on a state level, adoption on a country level adoption in industries, companies, and wealthy investors, wealthy advising firms, as we will see later on in very detail. If your net worth is in the millions, your strategy should reflect it. You're not just trying to grow. You're trying to protect, optimize, and simplify. You need an approach that accounts for tax, liquidity, sovereignty, and multi-generational planning. Forget one-size-fits-all advice. You've probably heard just put in 1 to 5%, but this is very generic advice. Some of our clients, they're holding 10, 20, even 50% of their net worth intentionally with custody and structure in place. Even Anthony Scaramucci holds 70% of his wealth in Bitcoin.
I have 70% of my money in Bitcoin. Could you imagine if I can put my Bitcoin at JP Morgan and get yield off it? And there's a structure around it that protects it?
What matters is not how much, but why, how, and under what conditions. So let's look at some of these allocation guidelines. We have the conservative guideline, which will tell you don't invest more than 1%. Then we have a moderate guideline, which will go up to 5%, and growth-oriented, it's going up to 10%. But like discussed, these are very general numbers. So it's very important to look at your personalized portfolio. Find out how much risk do you want to take? How long is your investment focus? Do you have kids? Do you want to build up generational wealth? Do you feel safe in holding it in your own cold storage? Do you want to have a custodian? So all these factors are important to consider when we talk about your allocation. Bitcoin should support your lifestyle, not stress it. We design allocations not to impress anyone, but to preserve financial independence. This next strategy shows how to hold Bitcoin in a way that supports peace of mind and long-term flexibility. The pyramid on this slide shows us the financial independence strategy. So we have the baseline conservative income generating foundation. This could be your business. This could be other cash flow like real estate income or whatever, dividends, whatever it is. So you have a cash flow. Step number 2 in the pyramid shows us capital for accelerated wealth creation. And this could be your Bitcoin strategy. Depending on your needs, depending on your time horizon and so on. You could also go to number 1, high potential investment for wealth expansion. This could be other blockchain projects. This could be Solana, Ethereum, all the assets that have a higher growth potential, but that are not so safe like Bitcoin is, the Bitcoin strategy. And don't forget that Bitcoin's return over the last 5 years was 60%. So I would not really consider it as risky. This could be your strategy. Real diversification is not about holding 20 assets. It's about holding assets that behave differently when the world shifts. Bitcoin most of the time has low correlation with traditional markets and often acts as independent layer. That means it doesn't just add potential growth. It actually reduces portfolio risk when structuring it right. What are the key considerations? Bitcoin often moves independently from traditional markets, potentially reducing portfolio volatility. When properly sized, Bitcoin can enhance portfolio efficiency. Long-term horizon, 3 years plus, help mitigate short-term volatility. The question is not longer, will institutions adopt Bitcoin? It's how much have they already bought and how quietly. BlackRock, JP Morgan, strategy. They're not gambling. They are positioning. And most of them are not broadcasting their moves. What are these companies actually recommending to their clients at the moment? These are the institutional research insights. Let's have a quick look. What are institutions actually recommending to their clients already? XBTO research, they are recommending to the clients to invest between 1 and 3% into Bitcoin. This is based on multiple cycle performance, and they're suggesting even a higher allocation if you have a longer time frame. What about BlackRock?
But he sees a future for Bitcoin after previously being a proud skeptic of the cryptocurrency.
I studied it, learned about it, and I came away saying, okay, my opinion 5 years ago was wrong. Here's my opinion today. This is what I believe in today. I believe the opportunity today. I believe Bitcoin is legitimate. I'm not trying to say there's not misuses like everything else, but it is a legitimate financial instrument that allows you to have maybe uncorrelated, non-correlated type of returns. I believe it is an instrument that you invest in when you're more frightened, though.
BlackRock is recommending 1 to 5%, comparable to the tech equity risk exposure. Positioning size based on volatility management. JP Morgan now is recommending 1 to 3%. If you remember back, it's not that long time ago that they did not want to touch the asset, and they even forbid for the employees to have some. Fidelity is also recommending 2 to 5%. And also they're saying higher allocations if you have a long-term horizon. And yield research, 4 to 6%. Hedge funds, real estate, private equity, they all have their place in a long-term strategy. But they're not liquid. They're not portable. And they don't give you sovereignty. Bitcoin complements these assets, especially when paired with the right legal and custody structure. So how is Bitcoin performing against alternative assets? This chart shows us how Bitcoin is performing against alternative assets. Here, the brown indicates growth potential, the orange one or the dark orange, income generation, and here we have liquidity. So if we first look at the growth potential, we see that clearly Bitcoin has the most growth potential. Comparing Bitcoin, private equity, hedge funds, real estate. If you look at income generating, we see that real estate is the highest, and we have hedge funds, private equity. But like I told you, it is now changing. The first ETFs have already staking approved, and there's a lot of other opportunities also coming into the Bitcoin field. Your Bitcoin is now already be accepted as collateral if you want to have a mortgage. And this will continue. There will be products that will also give you dividends, give you returns or rewards. What about the liquidity? Of course, real estate, you have a very low liquidity. Hedge funds, it's also hard to take out the money. Private equity, even more. In this case, Bitcoin wins again. So it wins 2 of 3 in the competition. How do you buy? Where do you store it? How do you integrate it with estate planning, cash flows, or corporate governance? Buying is easy. Protecting it, this is where the strategy lives. These 4 steps are very critical for your portfolio. This is how a very simple implementation plan could look like for you. First of all, it's very important to define your goals. You need to define the time frame. How long do you want to hold it? Why do you want to hold it? Do you want to give it to your kids and so on? Then you have the entry strategy. When is the best time to buy it? This is very important. It can make a lot of difference, of course, in your portfolio. To do this right, you need to understand the cycles. You need to understand the strategy. You need to understand why the market is moving and how it will probably move in some years. You also need to decide who is going to hold your Bitcoin. Are you holding the Bitcoin yourself in self-custody with a hardware wallet, with a setup that is safe, or are you looking for a custodian to give it to them, to manage it for you? We also advise our clients to have a governance protocol. This protocol includes all the steps. So what happens if this and that happens? You need to have a framework for all the conditions to make the right decisions. So you're not getting emotionally, you're not making wrong decisions because you're under pressure. And this is not just theory. It's a real-world framework designed to help high-level individuals building and protect long-term wealth without complexity, confusion, or hype. Bitcoin is just one layer. The key is how you implement it. Let's look at the key takeaways. If we speak very general, an allocation from 2 to 5% is best for most investors. Yes, you have to look at your situation individually, because it is very likely that in your situation, you need to have a different setup. You have to separate the core from the speculation position. So you have a Bitcoin reserve, you maybe also have a different reserve with some other blockchain assets, and you have a speculation portfolio if you want to have a setup like this. You can also just have a Bitcoin reserve and don't look at all the other assets. It is very important to find the right entry point. So sometimes we advise that you buy a certain amount of assets straight away and then dollar cost average into the market. This really depends where we are in the market cycle. It really depends how much money you can put in and a lot of other factors. It's also very important to consider tax. So in which country are you living? Do you have a company in a different country? Maybe your country has two types of capital gains. There are some countries they have long-term capital gains or short-term capital gains tax. In some countries, if you have long-term capital gains tax, like in Portugal, Germany, and some other countries, you don't pay any tax if you hold it longer than 1 year. And there's also other countries where you don't pay any tax on your Bitcoin holdings. If you're earning 6 or 7 figures or have more than $1 million in liquid assets, or your business is holding excess cash that is quietly eroding, let's make sure your capital is actually working for you with a reserve strategy tailored to your goals, timing, and jurisdiction. Book your confidential one-on-one strategy call with me now. No noise, no pressure, just clarity. Thanks for watching, and I see you in the next video. Take care. Bye-bye.